Hey guys, welcome back. Today it's Thursday, June 25th. I'm going to keep this one quick because I don't have time for a full market recap today. I'm traveling for work, as you guys know, which is why the audio is the way it is. But I really wanted to cover this because people have been asking a lot about Microsoft today with some big declines, also on Meta, Amazon, Mag 7 in general. So quick disclaimer, this is not financial advice. It's for educational purposes only. This is how I'm thinking about the markets, how I'm managing my own risk, and how I'm trading. And so the big story, and thank you to everybody who subscribed. I really, really appreciate it, and all the comments. It means so much to me, especially when I'm doing this on the road. So let's jump into it. And the big story today was what happened overnight and into today with Micron. So Micron absolutely blew out earnings. Revenue came in at about 41.5 billion, up massively from last year. Non-GAAP EPS came in at $25, and the company posted record results across revenue, gross margins, EPS, and operating cash flow. I just realized I should probably have Micron up. And Micron basically confirmed that the AI memory cycle is still extremely tight. Demand for DRAM, NAND, and high bandwidth memory is still overwhelming supply. And the company also highlighted major strategic customer agreements tied to the AI infrastructure. So this was a very bullish report for the AI hardware and memory side of the market. But here's the interesting part. It's also one of the reasons that the hyperscalers are still under pressure. So if you're in Micron, this is amazing. Memory prices are strong, demand is huge, and margins are exploding. But if you're in Microsoft, Amazon, Meta, Google, any other hyperscaler, really, Micron's pricing power is your input cost. So the market is basically saying, great, AI demand is real, but how expensive is this build out going to be? And when do we actually see the return on invested capital? And, CapEx was a big concern, but now we're seeing it play out in these types of earnings. And so that's why the chip trade can be green while the mega cap hyperscalers are still weak. And then a second major story that happened today was PCE inflation. And so, the May PCE report showed headline PCE inflation running at 4.1% year over year and core PCE at 3.4% year over year. Personal income and spending were both up 0.7% month over month. So the consumer is still spending, but inflation is still way above the Fed's 2% target. Jobless claims also came in stronger than expected, falling to 215,000. So the labor market is not exactly breaking. And durable goods were mixed. Headlined durable goods orders fell because of aircraft volatility, but core capital goods orders were strong, which points to continued business investment, especially around AI and computing infrastructure, as we could already see in the tape. And so inflation is still too high. The consumer is still spending. The labor market is still holding up. AI investment is still very real, but the Fed does not have a clean reason to get dovish quite yet, kind of like yesterday's numbers. And so that brings me to the part of the market I want to focus on today, the big hyperscalers and AI platforms that have been getting hit. So, the hyperscalers and the AI platforms have been getting hit because I think this is where the market might be throwing out some incredible businesses just because everybody's suddenly terrified of AI capex. And I've been saying that in a lot of videos, but of course, if you're holding these names, you're feeling the pain here and you're just wondering when it'll stop. And I'll talk about my positions just a little bit so you can understand my conviction in some of those and how I actually think we're likely around that point there. And that if we're not, it's okay for the longer term based on some metrics here. So let's talk about Microsoft, Amazon, Meta, and what's going on there. Let's talk about Microsoft because there's a crazy move that's happening right now, which reminded me I should probably be making this video. And the first thing I want to talk about is the metrics, okay? Because I don't think everybody is understanding what is going on here from a fundamental aspect because they're more concerned about the near-term price action, especially because this doesn't feel in the near term. We've been under the 200 simple moving average on the daily since the start of the year. So that's a long time to be under there. And also does explain a lot of this volatility. It's not a simple buy for everybody. But I want to look at the metrics first because Microsoft is one of the cleanest, quality just got cheaper in my mind. And I think you're starting to see that play out now here at these lower levels where it becomes a little bit harder to ignore for some of the institutions. So at the time of making this video, I was looking at 350 as the price, which was right where I thought we were going to consolidate. But since then, we've also started to do more than consolidate. However, we're coming back up to this fib, so I'm going to close this position manually right here, if I can. All right, cool. That was just a simple discretionary enter at the 350 because we have fallen 4% today. We're back up to 2.5%. But anyway, back to what's going on with valuations here. So at the time of doing this, or at least writing down my metrics, we were at 350, which meant the market cap was at 2.6 trillion. The trailing PE was at 20.9%, 20.9 times, excuse me. The forward PE was at 19.7 times. The PEG ratio, which I really love, was at 1.2, which is historically quite low. And the operating cash flow is at 15.5x. So Microsoft has been punished because it's both a hyperscaler and a software company. So the market's worried about the AI capex burden on Azure, but it's also worried that AI agents could challenge traditional software workflows. But now you're looking at Microsoft trading around the low 20s trailing earning multiple, under 20x forward earnings, and a PEG around 1.2. So for a company with Azure, Office, GitHub, LinkedIn security, and OpenAI exposure, the valuation has gotten much more compelling down here. just want to look at some of the technicals, and I want to talk about some of the things that happened today. So, one thing that I was noticing happening, hoping you could see this on the screen here, but we got a really large trade flash here, this delta trade here. 2,500 contracts for the January 27th 400 call for 98,000 deltas. And at the same time, we had some really big orders hit the tape. And it was one of the reasons I wanted to start looking at this. And this happened right around the same time where we got 102,500 shares traded. And it was on a dark pool here. So it kind of represents what I think was happening, which is somebody bought the long calls. Market makers needed to buy shares. And not too long after, price started to recover, which is a really interesting thing because now we're starting to see that play out on the tape here. We're also coming back up to this fib retracement. This was actually the full retracement. And like I said yesterday, it's not uncommon that when you lose the 8.6 on the fib, sometimes you retrace the entire thing. And then the question becomes, do institutions like it down here? The other thing to notice is that on the daily, we're finally getting the bullish RSI divergence here, where price has made a lower low, but RSI has made a higher high. And let's see how we close on the day to see if this holds. But it's something that I was watching because I was watching it on smaller time frames. Because remember, I'm looking at these things as where should I be scaling in because of some of the trades that I have going on. So a lot of people are watching YouTube for hopium, meaning they see their investment going down. They want to see all the bullish news that they could possibly find on the name. I'm not analyzing it like that. You know, this particular play for me is a long-term holding. There are some options overlays for the near term, which are going to still play out for me, hopefully. But I'm looking at this intraday price action to see what the flows are doing. And today there were some really great flows on Microsoft. So the short answer here is I think that this trade is still alive. We may have found a bit of a support here. I wouldn't be surprised if it did fall through. But the fact that I'm starting to see some of these participants take some larger bets gives me a bit more conviction. But we're still going to see how this plays out. And remember, I've mentioned this before. This isn't financial advice. But again, when you're watching YouTube videos, don't take a trade just because somebody else is taking a trade. You have to understand their risk, where they're scaling in, where they're scaling out, and how they're understanding the time horizon for this. And if it's a fundamental play, a qualitative play, a quantitative play, some type of pairs trade, all that kind of stuff. And there's not enough context when you're watching this. But I do like to look at those flows intraday. So hopefully that has become a bit more helpful for you to understand. And it does look like we're oscillating right ahead. It's no longer oversold on the day. I'd have to see if we actually got some additional news that was happening today. I know that there were some price hikes announced for Xbox, and that's coinciding here with the Grand Theft Auto pre-order day. So that may be driving up prospective sales or price margins. Who knows? I didn't prepare that for today. So now let's look at the next name, which is Amazon. Right. So Amazon, again, I also want to cover the metrics, but somebody was kind enough to ask if I could cover this today. And look, it has a very similar pattern where we're hitting fibs and kind of we swept the liquidity below them and we're coming back above, which I really love to see because Amazon's not one that I have long-term shares in. I've cut that previously, but I do have cash secured puts on it on a number of other accounts because I wouldn't mind getting assigned down around $210. I sold cash secured puts at the 220s, but I sold it for $10 in premium, which means that my break even would be at 210. So I won't get assigned until it gets down there or below generally. So I'm okay with that. And I'm looking for it around 210. And that's one of the other things I wanted to mention here. And I'll get into all these hyperscalers in general once I cover the metrics. But a reason why I think we're starting to find a base is based on some earlier analysis that I did and a number of cash secured puts, because also on Microsoft, I didn't mention it as well. I do have cash secured puts I sold them at the 360 for a few months out from now. But my cost basis was such I wouldn't get assigned until 350 or lower. Or I suppose I could get assigned sooner if we really do dump. But essentially, I'm okay owning them at 350 based on other analysis in my model. So back to Amazon, what I want to talk about was the actual metrics here. And so Amazon's getting hit for the same hyperscaler reason. You know, if Micron is showing that memory is scarce and expensive, that's great for Micron, but it means Amazon has to spend more to build AWS AI capacity. So the market's questioning the ROI on the AI infrastructure build out, just like it was on Microsoft. But Amazon at around 28 times earnings with AWS advertising, retail margin expansion, and still solid growth is not the same insane bubble multiple anymore that it once was. And so the case is that if AWS AI demand keeps converting into revenue, the operating leverage can come through later. And I also do have a bit of a viewpoint that if all of this disruption is happening because of AI agents, I don't think that cloud hosted AI should be getting hit as hard as it is. But again, that is just, some speculation there. I just want to play the earnings for the longer term and I want to play the technicals for the nearer term. And so let's look at the technicals here, because one thing that happened today that is not great on Amazon, and let's see if it actually closes that way, is that this line right here is the 200 simple moving average on the daily, and we've fallen below it. So it kept pounding on it, and we finally fell through, but there was some fib support right below it. So this does look like an indecision point here, so I wouldn't be aggressively adding. However, this is a point where I'd be looking to sell some more cash secured puts, maybe pick up a few shares for the long-term portfolio. But RSI isn't wonderful. We're below on the MACD. I use MACDV, where volatility is also increasing. And if we also look at what's going on the SPY, and we'll get to that a little bit later, we're still in this compression zone between the 20 and the 50 SMA that prevents me from going YOLO, which I don't do anyway, into some of these names, but it's a data point that I use when thinking about getting certain names based on their metrics. But we haven't fallen apart from this move here. The 78 retrace on one of the fibs. We have a lot of fibs going here. I realize it's a lot of lines, but I just wanted to show you that we should have expected a little support here, and that is playing out. And since it's live trading day, I just want to check back on Microsoft here. It does look like it is finding a little bit of resistance coming back up here. But if it closes cleanly, it'll be an interesting story towards the end of the day. But just to stay on topic, Amazon is looking compelling for some cash secured puts down below, at least the way that I'm playing it, not financial advice. And I don't think the narrative has caused it to fall apart entirely. In fact, it looks relatively healthy here. Next, let's look at Meta, because Meta is also getting hit quite a bit today. It's down 2%. It was down a lot more before. It's starting to also have a little bit of interest. I, again, think institutionally, just looking at flows, and that was when we started hitting some of the oversold levels right up in the morning, and we've kind of evened out around S2. However, I do have my extended hours trading on there. So let's see what S level that is. Yeah, it's still S2, even given after hours there. But before I get into the technicals of it, I want to talk about some of the fundamentals. So Meta is getting hit because investors are worried about Zuckerberg and that he's going to spend aggressively on AI infrastructure and compress margins, similar to the other hyperscalers. But Meta is not a speculative AI story with no earnings. It's a company trading around 20x trailing earnings, around 17x forward earnings, with a peg below 1 on a lot of different websites. The peg is calculated differently in different places, but it's still a really great, compelling metric for me. It means there's a lot of growth and it's not actually fully realized yet. And so we're trading great based on that growth story to price to earnings ratio. And so the market is treating this like the CapEx is a pure negative. But if Meta uses AI to improve ads, recommendations, business messaging, and eventually agents, then I think this could be one of the more mispriced names in the mega cap tech space. And so let's just look at the technicals real quickly here, because it is a little bit different. It is also trading below the 200 simple moving average, and I think it's been doing that since the beginning of the year right here. So after the end of November at this earnings, that's probably when CapEx really started to spook everybody. But it's been following some of the same dips and valleys that a lot of the other hyperscalers have. And I don't want to focus on it too long, but Google was what really kicked this scare off here on June 1st. There was a lot of legislation I've also mentioned in some other videos, but the CapEx scare really started getting kicked off right there when Google started their raise. And so that's something to notice. And you can see it play out on the other hyperscalers. If we look at June 1st, again, I have a lot of lines going. I apologize for that. But right here, June 1st, we have this big, massive red candle. Tried to recover, massive candle. We just kept riding down. We're below the 20 SMA there. We are seeing some recovery on this throughout the day, though, which I do like. But I only wanted to touch on Meta briefly. I really wanted to focus more on Microsoft, and then people also asked about Amazon. So since I don't have too much time, I just do want to do a market forecast for you here. And again, that just means looking at the technicals on the market, using SPY as a proxy for that. And so like I mentioned yesterday, and I've been mentioning since it happened, probably the beginning of the month, that once we're below the 20 simple moving average on the daily, I'm not looking necessarily for the same types of trades that I've been looking during the entire uptrend. And what happens here is you have increased volatility. You also don't have a clear uptrend, especially for institutional buyers. And this is the point in which I shift my strategies a bit, and I start to be looking for undervalued companies that might be around compelling technical levels, and looking at the sentiment, seeing how far it's played out, all of that good stuff. I'm not going to go into all the strategies, but what I am going to say is that under the 20 simple moving average on the daily, it changes my framing and what the market regime is. And then I also got concerned in the last few days about falling below the 50 SMA. And we haven't had a real clean bounce. This wasn't like a hot touch and blast off it. So I'm more concerned that there's consolidation happening around here. And what this insinuates to me is we may have like a pullback in time. If you guys guys have ever heard that phrase, where essentially we're just going to consolidate in this range. And I also don't think it would be odd. I mentioned it yesterday after PCE that I thought we could fall down all the way to the 715 if PCE wasn't great. And tomorrow we also could have just as much volatility falling back down to 715. And this is, again, based on the pivot points here. So I wouldn't be surprised. And when I am seeing this, and I'm also seeing the pivot points start to trend downward just a little bit as we've crossed below again on the 20, that's also another point for me that I want to be managing my risk a little bit tighter, looking at specific types of trades that aren't reliant on the market going up in total. Trades review real quick. AAL is still on its way up. It did hit some upper resistance there on the weekly. We were looking for that crossover. It hasn't happened yet, so you got to be careful. This is around the time where some people start taking profits, wait for it to come back down to rebalance. I closed out one of my long calls on this, and I've set an order to re-enter when we come back down into what I assume could be support. It was acting as resistance as we broke up, so essentially a breakout retest. And another one I want to talk about is Xylem. So this is something I've been holding for a very long time. If you've been watching my videos for any length, you'll know that I've been holding this. I have a water portfolio in one of my other portfolios, but in this portfolio, I have some calls on it, which started coming back to life today as we broke above. This is on the daily. We broke the downtrend eventually. We've been consolidating. I'm watching this closely. I think there will be some rejections here, but it's starting to come to life a little bit, so I'm watching it closely. Yesterday, we also talked about Uber. Because there was some congressional buying, and that has since come back down. Like I said, I wanted to see it close above this trend. So I have some sell orders there if we are able to come back above there, but I have multiple calls, so I'm just waiting on that to close out one of them. But this is a longer term thesis for me. I think it's fundamentally undervalued. Another thing we were watching was Novo Nordisk. I am not in this trade, but I am thinking about it if we come back down here. We're testing the 200 on the daily, so there should be some resistance there. But if we come back down into this breakout retest over here, one of these lower pivot points, I might be interested in some cash secured puts, maybe pick up a few shares for the long-term portfolio. That's about all the time I have today. So sorry I didn't cover more trades. Please leave a message tomorrow. I may actually be traveling, so it might not be a video at all. But then over the weekend, I will make it up to you all. Thanks again for watching. I really appreciate it. Apologies again that there's been less videos this week. I'm traveling for some investments. And thank you so much to everybody who has subscribed, liked, commented. It really means the world to me. And please let me know if there's anything you'd like to see, any tickers you'd like to see, a format you'd like to see differently, if there's certain things you'd like me to focus on. I'm really here for you guys. This is why I'm making these videos. I've been trading for a very long time in various capacities. So I want to share that knowledge with everybody, and I'd love to know how you'd like that to be shared with you. So please like, comment, and please subscribe. Thanks so much. Stay safe out there, and happy investing.